Now that we understand the concept of liquidity, the importance it has on the markets, and conceptually what is actually happening behind the scenes, it's a good idea to, again, jump into an example or series of examples just to explain the concept a little bit further. And again, what we'll do, similar to all the other videos, we'll take a look at Euro US dollar. And what we're going to do is, initially we'll look at the 4-hour chart again. And we'll just look at a few different bits to explain the few different elements of liquidity that I discussed in the theory video. So what we can see is as prices moving to the upside, we start creating a series of equal lows. What ends up happening? Price sweeps those equal lows. We come down in because we've tapped into this pool of money that's starting to exist. And why is this happening? And we can come up with that for a couple different reasons. What we can see is we started to tap into a daily structural point. So we're looking at people who are selling. We have a double bottom right here. So we're looking for people who are buying. This is just an overall range, which is in essence a creation of liquidity or a creation of orders. And then what ends up happening, we'll just zoom in so we can actually see it a little bit clearer. Again, create some equal lows. We sweep those equal lows, which just means this move to the downside, this wick specifically, taps into all of the orders and money that exists right here before we rebalance price and continue pushing to the upside. And then when we continue on, what we can see is we have swing structure. And what we can see if we move on, again, we have swing structure here. We're starting to see the substructure. What we can see is as we're creating substructure, we're creating swing lows. And what's happening when we break these lows? Well, we're just tapping into all of the orders that existed within this spot. Create swing low, we tap in, we sweep, we've rebalanced price, and we continue moving to the upside yet again. Again, similar situation here. We create equal lows. We have this range right here, but again, we have equal lows. We come down, we sweep that liquidity. But more importantly, what do we have here still? We have relatively equal lows. We sweep them. And that's one thing about the equal lows and equal highs, or relatively equal structure that I had in the example. They're pretty even, but we can see stuff like this, and this is still relatively equal, because at the end of the day, again, going back to the concept of liquidity, we're just identifying this as an area where orders exist. And then what we can see if we pair this with a demand zone, we know that there's already a bunch of orders that are present within this area, and this is the reason why we'd be looking to buy in the first place. So when we get the sweep of liquidity, we can see that price swept these equal lows, and then price began to run to the upside. And what we can see if we just move on is we create equal highs, we tap into demand zone, and we use that pocket of liquidity, the orders that rest in this price range. So what we can see is as we're creating highs, creating liquidity. So in this case, we'll just draw that a little bit better. So as we move on, what we can see is before we break this high, we can see that we have this structural point. Again, what is this? This is just liquidity. Why is this liquidity? Orders exist here for numerous reasons. Even price numbers, swing structure, breakout traders, stop losses, you name it, there's orders resting within it. So when we continue, we move to the upside, we absorb all of the orders, or the majority of the orders required to rebalance price. Then what ends up happening, price creates equal highs. As we can see, actually, if we go in a little bit more granularly, we create a swing high, we sweep it, create another swing high, we sweep it, we've rebalanced price for the moment, we come down, we tap into demand. What do we do down the way? We create more swing structure. We have a pocket of liquidity here. We tap into it, and then we run to the upside. And this just keeps happening over and over again. And then if we just kind of scrunch up our chart just a little bit, what we can start to see as we are creating that structure is we're creating that overall trend line liquidity, trend structure liquidity, whatever you want to refer to it as. But as we can see, we're just creating that. And as we can see, price just breaks through all of these levels like nothing. We have some equal lows here. What happens is we sweep those equal lows and we continue moving to the downside. But again, it's all because of this concept of liquidity. And more to add on to that, and we'll touch on this a little bit more in future liquidity videos, more specifically the next one. But just to kind of get your mind thinking as well on the concept of pockets of liquidity on its basic end is price doesn't like empty space. We create rapid moves. we have a lot of empty space happening. And what we can see is when we create these sorts of empty space, so we have empty space, what do we end up doing? We fill all of the empty space, we filled most of the empty space, it's filled. And see here, empty space, filled, swept, empty space filled, empty space filled, empty space filled on the upside and the downside, empty space. What is all of this? That's all empty space. And look what ends up happening. This is what we refer to as some sort of liquidity void or void of orders, whatever you want to call it, but in its bare minimum or basic understanding is price doesn't like empty space. And what we can see is big empty space. What ends up happening, we fill it. And I'm just squiggling on my charts now at this point. And what we can see is empty space, filled, actually filled, small bits of structure. And the reason this is happening, it's not by coincidence. It goes back to the concept of liquidity. It goes back to the concept of understanding that there needs to be multiple orders. There's multiple orders resting at multiple prices. For every buy order, there needs to be a sell order. Every sell order, there needs to be a buy order. And as a result, price doesn't like empty space. Why? Because we're in a constant exchange of buying and selling, supply and demand. And in order for that relationship to exist and continue moving, they need to be in balance. When they're not in balance, price moves. Where does price move from? It moves from one liquidity pool to the next. What are liquidity pools? Collections of orders. So if we have liquidity pools here, price is going to tap into them. When price starts to move to the upside, what are we building down here? Liquidity pools. So there's a lot of money sitting in this area for various reasons. Again, what do we end up doing? We come back in to the liquidity pool, start developing structure here. We build a liquidity pool here. What ends up happening? We fill that liquidity pool. Another liquidity pool, because before the structure is created, we just have this big empty spit of space. We also have trendline liquidity here as well, getting a little messy and a little bit all over the place. So it's just one thing that liquidity is just present everywhere, and it's such an important concept. Now, one thing to note about liquidity though is don't trade anticipating a particular sweep of liquidity or anticipate a potential fill of a void, things like that. What liquidity is, it's just an understanding of where a price is likely to go based on the logical order flow and understanding the inner workings of what's happening in any sort of financial market. If we know that we have a large void right here, we know that we have equal lows, we know that we have a demand zone, we know that there's a high probability that price is going to move back down into that area, rebalance price, and if we're looking to buy, that's probably going to be one of the better spots to look for buy entries to build a trade idea. And it's that understanding that helps us build higher probability trade ideas. But again, don't anticipate a sweep of liquidity or a void being filled, but instead trade the actual reaction, the after the fact play of that. What it's going to allow you to do is make better, more informed trading decisions, which is in essence going to allow you to position yourself in the right spot, because you're not trying to force your opinion or your will onto the market. You're saying, I understand what the market is doing based on market structure, based on supply and demand, based on liquidity. I have an understanding of where likely orders are going to be sitting within the markets. And once I see those sort of things happening, I can make better trading decisions. But the concept of liquidity, it allows understanding of price at such a completely different level. And what we can see is, again, equal lows. We got a sweep, we fill a void, and we start to see order flow shifting from bullish to bearish. And then we see a break of structure to the 4-hour, now creating lower lows and lower highs. We get a void in price. What ends up happening, you can see that we have some swing high here, we sweep the swing high, we have swing high here, and price fills the void and continues making a lower low, lower high, take liquidity of that, we move to the downside, and this is just continuously happening. As we can see in a more recent bit of price action, you can see price is coming to the upside, we're creating this large void in price. We're taking liquidity, taking liquidity, taking liquidity. We've rebalanced price to a certain expectation, and then price starts to break down to the downside, creating lower lows and lower highs. We're starting to see the shift of order flow back to bearish again. Equal lows, sweep, equal lows, sweep. And we can see on the flip side, void, tap into a supply zone. We have a void this way, It gets filled, swing structure, liquidity run, pockets of liquidity, orders being facilitated. Again, that's all that's happening here, is that orders are being matched, prices being rebalanced. But again, it gives us a good indication of what's likely to happen, because as we're looking at this bit of 4-hour structure, what we can start to see is trendline liquidity. What does that tell us? That there are a lot of orders that are resting above these bits of structure. And what we can start to see as well, if I just draw a line like this and go something like this, what do we have? We have a void in price, but more specifically,
I just want you to know that I also share trading signals to community for free in the Telegram channel. For example, yesterday, I share the gold signals to community. You see all free TP getting profit yesterday, and the whole community getting profit by this trade. You can see every day I share trading signals to community, and most of them get profit. And especially, I do not only share the trading signals, but I also share the markup and the reason why I entered the trade. And by this one, everyone in the community can understand the reason, and by that, everybody can improve their trading skill. And to join community for free, you can click on the description of this video and click this link here, and you will be directed to the community and join for free.
We have a much larger void in price being created. Now, that's not to say it's going to be filled immediately, and that's something I don't want any of you thinking that once a void is created, we just have to go up here next week. It doesn't have to happen that way. It can take a long time. But as we can see right here, we created a massive void in price, and what did we do? We filled it all. A massive void in price, we filled it all. The market is just moving from one Dorito to the next. Really bad joke, but maybe that'll help some people kind of remember what's happening here. But what we can see, we're just creating voids in price. Price does not like the empty space. We have larger voids, and then we also have smaller voids, and we can put this all into market structure. And this is where everything starts to really align. Market structure, supply and demand, liquidity is when we can frame up market structure. Because what we can see, if we just look at an example of market structure, for instance, we have a daily bit of structure. We're here on the 4-hour chart, but what we can see on the daily chart is that we have structure being created. We're in an uptrend. And as we can see is we've created a high, created another high. We've run that high. Our expectation of prices to continue to the upside is that price would continue. But what we can see is, more specifically, if I just zoom in, because if you're looking at this, we might wonder why this was not the next high, and then this would be the low to switch to a earlier downtrend, which is valid. But what we can see is we do have equal highs. We have all of this spit here, and what does that suggest? Pocket of liquidity. We sweep that, and then we don't get any follow-through. So even if we're just looking at that, what ends up happening? We have a void. We fill the void. If we were to expect some sort of high or low to form, we would expect somewhere in this spot or maybe in around these areas to look at demand zones. But what ends up happening? We sweep the liquidity, and then we shift from bullish to bearish, and then the order flow completely changes. And what we can see is as this is being created, we start building trendline liquidity. We start to create a larger void in price. If we're just squishing that down here, we have all of this empty space right here. So we know at some point price is likely to come here because we have a collection of orders existing within that area. And what that ends up doing, we see price switching from bullish to bearish. We're starting to see market structure shift. We're starting to be able to include our substructure, switching to minor structure, breaking swing structure, forming in new lower lows. You can see we have equal lows right here, pool of liquidity, create a void. What ends up happening? We start putting in substructure. Once again, we'd see that we have a void here. This is all void as well. So chances are we have high probability the price is likely going to gravitate somewhere in this area. This is where we pair market structure, and this is where we pair supply and demand zone, and this is where we understand liquidity, because what we can see is we have swing highs, swing highs, swing highs, swing high, supply zone, and then what is this above? It's a daily supply zone. So what we can see from all of that is price taps into the supply zone. We tap into liquidity that rests above all of these swing highs. What does this also do? It completes the void that is resting right here. Again, the simplest terms. Now, I just want to keep reiterating this so it doesn't go over anybody's head, and try and simplify things as much as I possibly can. as all of this structure is being created, what's just happening above it? Orders. Simply put, orders are being created in this area. That's why the void is created. That's why we see a sweep of all of these highs. We pair it with a supply zone. We pair it with the fact that now the daily has switched from bullish to bearish. We've seen a change of character. We're starting to read market structure. And we're able to come up with an overall high probability trade solution or trade idea. Of course, if we're looking at it from a 4-hour bit of structure, we can see that we do create an uptrend. But again, this is where multi-time frame market structure comes into play, because we're starting to create what looks to be a break of structure to the upside. But then when we pair that with liquidity and understanding supply and demand and market structure, if I go up to the daily chart, we go to this spot right here, and what we can see if we just go to the daily chart and zoom in, we can see this a little bit more clearly with a little less noise. We have a structural high, a structural high. What does this candle right here do? It sweeps these structural points. We have a daily supply zone that price is tapping into. We're starting to see that shift from bullish market structure to bearish market structure. So we've seen that change of character. We pair that to what's happening to the left. We've just reacted off of a weekly point of interest, this weekly supply zone. So we're starting to see that there's a catalyst for price to switch order flow. And now we're starting to use market structure, supply and demand, and liquidity to understand what's likely to happen. Again, we react off of the supply zone, but then when we go into the 4-hour chart, we can look at this. And so if we're looking at this bit of market structure, we can see if I mark up these few spots in this wick right here, if we go onto the daily chart and just navigate here very quickly, what we can see when we pair up all of the things that we've learned thus far, we're looking at the market structure, we're seeing that price is in an uptrend, we're creating higher highs and higher lows. We see a breakdown of that structure, a change of character. We've now switched from bullish to bearish. We're creating lower lows and lower highs now. And for this daily downtrend to continue, we cannot violate this high specifically, this one right here, the swing high. And we're looking to break this low in order to create a lower low. And as a result, what we can see is we also have structural points. We have these structural highs here, here, and here. And what we can see from that as well is that we have a daily supply zone. We have a lot of orders. Very briefly and very simply put, there's just a ton of orders sitting here. And we're able to build up a high quality trade idea because we have, again, liquidity. We have a void in price. We have a supply zone. We have a shift in direction. We have a sweep of liquidity. And if we just move to the left, what we can see is we also have a catalyst of why price has shifted. We have a higher time frame supply zone that once price tapped into it here on the daily chart, we started to switch from bullish to bearish. So we're able to anticipate lower prices. And though we can see is as price continues down, what do we end up doing? We create a larger void in price that we eventually end up filling. We tap into the daily supply zone once more. Now we have a daily void. You can see daily void right here. Again, we go back to the concept of voids, but even if I just look at this, what is all this? Just one big void that's filled. Takes a long time to do, but eventually it does happen. Why? Because buying and selling is existing all the time. We need to rebalance price. We need to balance supply. We need to balance demand. We need to provide liquidity, which is the ability to convert an asset to cash without inversely affecting price. When you hit buy or sell, your orders, generally speaking, should be instantly executed. Why? Because there's liquidity that exists. There's algorithms, there's banks, there's other traders that are looking for trades on the opposite end of your trades and that are providing you with that liquidity. If that liquidity doesn't exist, that's why price is moving up and down. So it's just an overall example of liquidity in a nutshell, the basics. We have the different patterns that we discussed, the different patterns or components of liquidity, the structural liquidity where we have lows, we have highs, and at the end of the day, they just end up suggesting that there are pockets of liquidity. What does all this liquidity end up creating? It creates voids of liquidity or simply orders. All that's happening here are just orders that exist for multitude of reasons. We have trendline liquidity. We have more voids, more trendline liquidity. Trendline liquidity is at the end of the day, that's all that's happening. We're just moving from one liquidity pool to another. We're using supply and demand and market structure to understand the imbalance. We're using market structure to understand the overall trend so that we can be on the right side of order flow. And we're using supply and demand imbalances to be able to identify opportunities in the markets that we can capitalize on. Again, this is all just footprints of orders being generated that goes all the way back to liquidity, because liquidity is simply that conversion of an asset to cash. We need buyers, we need sellers, we need sellers, we need buyers in order to exchange things properly. And it's that constant battle between the two, the ability to provide liquidity, and the reason why price is moving either up or down at any given time. And that's how we're able to drive our edge by, again, creating the understanding of market structure to establish trend, using supply and demand to be able to identify when imbalances between supply and demand exist, and areas that we can look to piggyback off of the imbalance of those orders, and then being able to use the concept of liquidity to understand where price is more than likely to be drawn to at any given time as it rebalances price to facilitate orders at various price levels. So what I recommend now that you've taken a look at this example is go to your charts, start mapping out liquidity, start understanding the liquidity concepts, start seeing liquidity voids on your charts, start looking at structural liquidity, start looking at equal highs, equal lows, or structural liquidity, and looking at trending liquidity, whether it be downward sloping trend lines or upward sloping trend lines, and just become very comfortable with understanding liquidity and what it implies to price. Again, we don't trade anticipating a sweep of liquidity or a fill of a liquidity void. Instead, we trade the reaction, and we use all of that information as a confluence when we facilitated all of the information from our market structure via trend and supply and demand zone. Liquidity is really just the confluence that gives us a better edge or better understanding of where price is going to go in relation to the orders that it's facilitating based on the imbalance between the supply and demand that is present on the charts.
I just want you to know that I also share trading signals to community for free in the Telegram channel. For example, yesterday, I share the gold signals to community. You see all 3TP getting profit yesterday, and the whole community getting profit by this trade. You can see every day I share trading signals to community, and most of them get profit. And especially, I do not only share the trading signals, but I also share the markup and the reason why I enter the trade. And by this one, everyone in the community can understand the reason, and by that, everybody can improve their trading skill. And to join community for free, you can click on the description of this video and click this link here, and you will be directed to the community and join for free.